Good late evening, people's early Friday morning, December the 12th. Of course, it depends on where you are. Where I'm at, it's already early afternoon on Friday. But we got one more day this week in the markets. All right. I decided to do a few additional things. I didn't report last week on the Roundhill, um, but I do like them. And I wanted to do a deeper dive. This isn't a rant, but it's an appeal to everybody to pay attention to what your real return is. I know we talk total return. A lot of people now talk total return. I've been doing it since day one. And furthermore, while there are cycles in the market, there's also capital and sector rotation. And although the Mag 7 aren't dead, they're slowing down and they will be underperformers to the market along with the Nasdaq and the S&P for a number of years because of a commodity super cycle. I had somebody just the other day in my Patreon. It just I'm more commodity focused, but I do some of these comparison kind of videos. But I want you to think about the logic, okay? And it's not offensive to the person that said it. I could tell you a story about an engineer I had and an issue in a demo, and I thought to myself, this is an engineer. He has a lot of talent and understanding technology, but there was a very basic flaw in his whole presentation. And I was just bewildered that the basic that they didn't understand. So anyway, this goes back to this. Their comment was, "Hey," they were asking in the Patreon, I'm really into high yield, and I see a lot of commodity stuff here. So am I in the wrong place?" So what I would say to anybody, if you're in high yield, are you really in high yield or are you in total return? Because by the time I'm done today, it doesn't matter what the asset is. Are you making money in the asset? That's what I say. I've said it forever. And I want to demonstrate it slightly different. You guys know I love to teach, I love to rant, I love to try and drive home points, but I still see people struggling with the concept. It's like if all you've ever had in your tool belt is a hammer and a screwdriver and you don't know other kinds of tools, then you're only going to try and work with what you know. And so I'm always trying to remind people because I don't think people fully understand. Now, I know there's some of you that do, but I'm really talking to potentially those that don't. So let's dive in. So here's Nvidia. So all of these first five, if you guys remember in Roundhill, they launched five, and these have been around going on 10 months, I think 296 days. And then they launched five more, and those are maybe 6 months. And then they launched five more, and those are 4 or 5 months. And then they've launched more now that some of them have only been out for 6 weeks. So when I wanted to do, what you guys care about initially is, okay, here's an NVDW based on Nvidia. What did it pay? It paid 47 cents, 58.71% yield. Here's the current price. So what was the weekly change? Did it go up or down on the NAV? Right? Did the percentage go up or down? Well, they're paying a greater percentage, went down a little, a dollar two. So this is a better payment in terms of distribution yield, but they went down a dollar two. But I think what's important is I just picked this. This is a random, I just did 6 months groups and said, okay, well, over the last 6 weeks, how's NVIDIA trending? NVDW, but based on NVIDIA. Well, its NAV has lost $9.29 and you've been paid 264. So it doesn't take a rocket scientist to say it's not trending well, but 6 weeks doesn't make for holding a fund forever. If it's a positive fund, normally it's kind of an ugly 6 weeks, right? And so you have to be conscious of that. So what I added here, and I did it for all of them, As I said, what's it look like over the last 126 days? Well, what's 126 days? It's three groups of six. So I add these together and I say 126 days or 18 weeks. So that starts to give you an idea. I think I did the divide and it was around 34.5. Right. So as a percent of a year, it's over a third of a year. It's over 4 months, right? It's about 4 months and 2 weeks, right? So 18 weeks. 18 times 3 would be 54, right? Not 52. So you can see that it's more than a third of the year. So how you doing? Right? How you doing? So you're not doing so great, are you? You got a 0.20%. What would you be getting in a treasury bill? And that's for 18 weeks. So I want you guys to understand sometimes that there are better things. And people that say they trade them and do that, I realize a lot of you don't have that. But I've been preaching and tried on my channel. And even when I do my metals content on YouTube, most of you just either stop subscribing, bury your head, okay? Or if you really subscribed and bought into what I did, you followed me over on Patreon because you're making a lot of money. And there's some of you, and I've talked to you, and I understand it. It's psychological, it's difficult. You're saying, "Hey, I'm over in the new stuff. I'm seeing great results, but I'm hoping to get even on, hopium. I'm hoping that Misty gets me back, or this one, or that one, or whatever it is." But I keep trying to tell you guys that if you're not in the capital rotation, right, the sector rotation, you're not going to produce a lot of wealth. And it just doesn't resonate. I get it. Some of you, because all you do is look, you stop listening to me, you're over there on the other channels and it's block this and, the targeted 50 now or, whatever it is, you're still living in the tech world. And in the S&P 500, you're doing the index. They're just simply are decades. Call them lost decades, all right? The 1970s, the 2000 decade, where there was capital and sector rotation and other assets outperformed 5 to 6 to 1 of what the traditional assets did. And why in the hell can't you guys figure it out when I keep telling you and not put some money over there and make money instead of just doing the same thing you've been doing and expecting fabulous results? How's that? Right? Misty was great for 16 months. But how you doing lately? Not so good. Now, Bitcoin, I actually believe can come back and have something. But I'll look at it when it does. It's not now, and it's ugly now. Okay? But some of this other stuff, it's the same thing. Wait till the rug pull happens. Wait till we go to are you just going to wait for the 30% decline in the Nasdaq and the S&P? And then oh yeah, it'll hit my capital rotation over in the metals and miners when it does for about a week. And everybody will say, "Why the hell are you selling the miners? They're printing money." Right? The metals are going to fly. You're probably not even going to knock silver down much. So that's why I'm doing this stuff. I do it for a reason. Okay. So I know some of you, when I was doing my silver videos, missed the rant. I get it. I'm back to the rant. Here we go. So it's dead money. You didn't lose money. You just didn't even make 0.25% return in 18 weeks in one of the most popular stocks in the world. But it's popular for the wrong reasons. You don't go to 5 trillion and just keep on going. The time to buy Nvidia was when it was 50 million, right? Or some super low right? Even 1 trillion and ride it to 5. It's not a dead company. It's got some great technology, but if you think it's going to go to 10 and 15 in the ensuing years, I don't know what to tell you. You're going to be sorely disappointed. All right, so let's keep moving. So Nvidia still has good stats over the entire period, but this is rising and this is shrinking, right? And we'll see. It's not like these stocks, every Mag 7 go throw it away. Different ones are doing different things. Nvidia's just got margin problems, right? So let's look at Tesla. And again, it's one of my favorite between Palantir and Tesla, the underlying. It's a couple of my favorite techs because I think they can reinvent themselves. They just got so many tricks in their bag. And I think NVIDIA's kind of got one main thing that it owns and leads and everything else, but it's suspect to margin erosion with competition. So let's look at Tesla. You did way better, right? Now, 18 weeks doesn't make forever. If you go back and you look at the time frame, this didn't do as well over the entire 10 months. But you got to look at now, 2102 to 16, but where's it trending? Right? You just you're a little positive here, you're a lot more positive here. You're really positive here, right? And then you're slightly negative. So when you run the 18-week numbers, you got a 37.08. Now, these aren't annualized. I'm going to show you a stat that annualizes them. I'm just giving you what did you make, what did you lose, right? So you made $2.07. Anytime you make positive on the distribution, I mean on the NAV, you're never going to see a red number over here in distro. How could you? They're giving you money. You got money on something, right? So this is using the price 18 weeks ago, right? So you made 1241 by 207 in the NAV and you got your distribution. And so many of you guys look at this and you get wide-eyed, right? And you forget about this. When it's equal red, or wait till I show you some really ugly ones, guys. It's brutal. And so you tell me so many times, oh, maybe I'm in this Patreon. I'm really interested in high yield. This seems like commodities. I'm probably in the wrong place. No, you're not. Absolutely. But if you think that you don't associate commodities, do you even know what commodities are? Do you even understand what a decade of commodity focus or a commodity super cycle even means? Obviously not. Okay, so nice for Tesla. But I mean, Tesla's going to get hit too, guys, if there's a 30%. But that always happens. So the market needs to reassess value, right? And so it just gets slammed. And then there's margin calls, and this is the highest margins ever been in the history of investing. The most people at the highest leverage with margin. And so the market's overvalued. Just, they're kicking the can down the road this year. You're hanging on, right? I can't tell you when it is, but I know it's coming. I just don't know when. But in the meantime, the commodity super cycle is running like crazy. Like I said, it can get hit too initially. And so the really good ones here are going to hold their value and come back. If robo taxis to be, if the generational robots in the homes, and just a lot of tech that Elon is constantly working on in that company. It's amazing, right? But we'll see. All right, so let's keep going. Apple, how'd Apple do? Not bad. One of the better, right? Compared to Meta and some of the other ones. So this is, slightly negative, but still positive. Anytime you right? This was just dead positive, right? Both green, both green. So again, over the last 18 weeks, it's awesome. 26.81. Is it really long in the weeklies? You see how many. This is brutal, guys. I don't have to tell you. You know, Bitcoin's not performing. You know, Coinbase. You know, all the rest of this stuff. It's negative gain for the year. MicroStrategy just, dying on the vine. It's been brutal. And yet, it's only a negative 5. So if you lost 12%, but it is getting worse. Look at this, 7 to 5, 10 to 2. This one's positive 5, right? It had some earlier times. I mean, again, what does Roundhill do? Roundhill uses a little leverage. So you want to be in something that has a lot more positive. So, Nvidia is lucky to even be hanging on and barely be positive. It may not be over the next 18 weeks. We'll see. So Palantir, this one's interesting. You guys know I like it, right? So I did something unique here. And by the way, it just goes to show you, even Palantir, the great Palantir that you talk about. Okay. So here's this 18-week. It didn't get killed, but you netted, I said Nvidia only made, a couple pennies percent, right? 0.20. At least it was positive. Palantir was negative, -1%. Okay. But look, and Nvidia's number was nowhere near this in the previous 18 weeks. It was, it was better than the current 18. Now, only these first 5 have the previous 18, right? The other ones don't, if you're not in the ones that have been out for 296 days. So look at this. So if you've been in Palantir for a while, you can take, 126 days like this, because look what you did in the previous 126 days. You kicked booty. 123 points. That's the actual gain, guys. That's not annualized. I mean, you had a NAV increase of 2682, and you had distributions at 1084. Well, you're still getting Look at this. You got 1337, but you can't hang on to the NAV. It's difficult. If you haven't figured it out, only a few stocks are hanging on. Of that S&P 500, there's maybe 10, 15 that are even doing halfway. There are a lot of stocks that are barely hanging over. This market rolls over, it's going to get ugly. So now we go into the next group, guys. They don't have a full, you couldn't do an 18 and an 18. So Amazon still positive. You got to give that, right? But I want you yield guys that are chasing yield. It doesn't matter if you're chasing on Palantir right now. You're chasing it on Amazon. That is not 100 good return for 126 days. 2.13. Oh, I'm high yield. Oh, I'll bet you're high yield, right? That ain't high yield. Nvidia ain't high yield. Palantir ain't high yield. Most of them aren't, right? Unless you're getting into 10%. So that means you got 6% a year. You can get a lot of stuff 6%. I can give you an oil company that pays you 17% a year, and it's going to do nothing but go up in the next 5 or 6 years. So, you're watching this, and it's just, it's some of it, it's crazy. People. All right. Gets better, but if you look at the results, a lot of times it doesn't look good. This is just one of those that's slightly fools you. Every time I look at the stats over here, I wouldn't have thought that, right? So it's up 29 cents, paid a dollar, down 294, paid a dollar 45. That one stood out as negative. This one stuck out as positive. So, and this is supposed to be kind of the, recessionary, right? The kind of companies that do well in downturns, a Procter and Gamble, where you got to go buy everyday products just because there's a recession. What do? Cut back on soap? You cut back on deodorant? There's core foods, basic foods that you need to cook at home. You're not eating out as much. So there's just things that a Berkshire Hathaway from a utility, certain things, do you turn your electric off? You know, if it's super hot, scorching summer, do you just not run air conditioning? If it's freezing in the winter, do you just not turn your heater on? No, right? There's a certain level. So here's another one. I think that it didn't do that bad, but I think so many people look at this. So many people look at this. And it pays like crazy, I'll tell you, right? It really does pay well. And if you were in this, and look at this, you see this $2, right? A dollar, $2. I mean, this is weekly, guys. But boy, when it navy roads like this, how'd you do the last 6 weeks? You lost $10, a net 10, almost a net $10, like $9.70. This one was pretty good. This nice payout, way higher payout than you're getting now. And this was a good payout. And this one, and just breaking even, if you're zero over here in NAV and you're getting that kind of yield, that's cool. This isn't cool. You get another one of these and maybe it's down 25 and it pays you 4. That can get ugly in a hurry. And that's what can happen to big tech. So all I say, and I've said this a million times to you guys, I don't see the intellectual property that the underlying really has long term. I don't see a 5-year company that's just going to fly all the time. There's just too much competition in the brokerage. Somebody will buy them. I know, I hear all the tokenization, I hear all the reason. I don't buy into it. I will tell you it's been an absolute big payer. But look at even this. If this was just minus $2 and this was $12, that'd be pretty great. But when you pay that much and you still a NAV where you got positive, but hey, 9% for a third of the year, that's not bad, right? But just know what you own and know what you're chasing and understand if it's truly high yield. And look at Meta. I mean, this is a huge company, guys. Minus 27.38%. It distributed $1.59 and the NAV went down $16. So you lost 14. That's ugly. That's really ugly. Netflix, almost as bad. I mean, I don't know what's happened. I haven't owned it in ages, but I remember when Netflix at Yale-Max was the only, di distribution company. It was always one of the better payers going way back. Well, it clearly isn't. It's just ugly again. I mean, you're not in high yield to lose money. If that's what you mean, nobody should be in high yield. There's another one, Microsoft, -9. That's not pretty. Every one of these is red over here. Like I said, these are always going to be green. It's positive money. They don't pay you negative money. Oh, here we go. Look at this. 71.24. Look at the NAV erosion. The only one worse than that would be MST from Defiance because it's 200% leverage. Just brutal. I feel for you guys. And yeah, do I think you're going to get a bounce and this thing could do better for a few months? I don't know if it's going to heal. But as things get beat down and beat down and beat down, they do bounce. You could have a 4-week bounce and go up 25% or something. But until I really see a positive trend, it's got to be a 4 or 5 month trend in MicroStrategy, if it ever does it. I think Bitcoin can. But how long is the winter going to sustain itself? I don't know, guys. It's not a sector I want to be in. And AMD has surprised me. You guys, I've told a lot of people that I thought the semis were going to be under a lot of pressure, and they were, and they bounced. They've gone back up near their highs. I still think that a sell-off is coming. I think it's probably not till mid-January now. I think it will get by toward the end of the month. Holiday season. Remember, guys, you remember what happened on Thanksgiving week? The same thing happens on the Christmas week and going into New Year's. The big money is out. The little money can push the market around. They can have a Santa Claus rally and push things up, and everybody's rah rah rah, and then turn around by the second week of January, and we get the real input. I said that about Thanksgiving, but I should have realized when I said that we'd turn around into Christmas. We got the rate cut. Now we're starting to get pressure about they don't want to cut it, and now they got QE coming, right? And that rate cut is like fuel, like throwing gasoline on the fire for the commodities. Negative real inflation, that's going to fuel gold and silver higher and higher and higher, and the other commodities. The other commodities are starting to wake up. But you got gold, silver, platinum, palladium. And it's not a big deal in the markets. Most people aren't talking about it. Like it says, probably it could even be in the top of the fourth inning now. I was saying bottom of the third. But just take a look at silver, guys. Silver's telling you something. Been doing videos on silver. Nobody watches them. I mean, 300 or 400 views. You go out and watch 7, 10,000 views on somebody talking about crap, right? High yield. Oh yeah, it's real high yield. AMD did good, guys. I'll give it, but I do think the chips are going to become under pressure again. I think this bounce is exactly what it is. A bounce back up to test the highs before it sells off. And it'll probably last through the end of December. All right, Avco, another company that is hanging on. It's challenging its high. It's acting like it doesn't want to go down. It had a fabulous time. But these companies are so overvalued. They're not part of the commodity super cycle, guys. They're not going to maintain this kind of growth for the years ahead. But at least if you're in something, see what's performing. And Avco, Broadcom has. It's done really well. And look at Google, the best of all. And we kind of got an indication on Google. It's not a secret that Warren Buffett was throwing a lot of money into Google. I think he clearly looked at the Mag 7 and said, I don't want any part of that. Well, wait a minute. Google's sort of the exception. It's undervalued. It's got some things coming out. I like it. I mean, you got a Google, you got a Tesla, you got a Broadcom Avco. You got a few in the tech. I do think they're going to get under pressure, but maybe Google has a plan for that. It sure is kicking butt right now. It's pretty clear. So if you want to put something in high yield and you want to stay in tech, put it there. But I got other stuff that's going to last 4 to 5 years, guys, and a pure capital rotation into a bull market run. I don't know that Google's going to run for 5 years, but I know the commodity super cycle will. Is it all straight up? Hell no. It's up big, retrace, up big, retrace. But your other stuff just dies on you. I always say higher highs and higher lows. That's what you want to be in. And look at this. Most of these are disappointing. The next ones I'm going to show you. Until I get to the gold and gold miners. They're just kicking butt. Compared. Now again, these are over a shorter period of time. They can only show, these have, I think, 7 weeks, and the next ones have 6 weeks. So it works well. I just show the 6-week summary. But look at that. Look at how many of them are negative. I mean, Costco, fabulous company, but it's got a negative 4.81% return over 7 week or 6 weeks times 7 is 42 days. That's 1/3 of that. I wish I could show you more, but I can't because that's all the data that we have. Uber, a lot worse, right? We go from 5% to 15%. And ARM, which I think is a fabulous technology, is down 23%. I mean, it pays. It's the bigger payer, 50, 242, 350. But look at this now. That's just brutal. And I like that Babo, the underlying here, Alibaba, but it's not doing well. Again, I think what has to happen is we have to get hit on the Nasdaq. We haven't punished the Nasdaq for having those super high PEs and the Mag 7 and the big tech. Yeah, there's going to be an AI boom going on for a number of years, but even in every boom cycle, it's up and down. And they're giving everybody credit for AI. They're giving the entire Mag 7, oh, you're AI. Well, yes and no. So this is ugly for now. It's kind of like oil. I'm telling people in my commodity super cycle, get positioned in some oil service plays. You can go out and buy the Spider ES. I've recommended some oil companies. I'm not going to give away the stuff I have, behind my paywall. But and it's early. We probably, we could still go in oil down to 52, bounce back to 55. We're 57-ish now. But it's going to turn. It's going to turn next year, and it's going to move for 4 or 5 years. It's going to be triple digits, guys. I'll have a 2 number on it by the time it's done in triple digits. The first number will be a 2. Of course, it'll have to go to 1 first. It's explosive potential there. It's underinvested, underthought of, underpriced. I'm in early. I don't mind being in early because then when everybody skates to where I'm at, they just all those buyers come in and it all rises up. But if you wait for confirmation sometimes, then you're paying the higher prices. But still, if you got it in 6 months, you're going to do well in the energy sector. You got uranium, you got oil, you got natural gas, you got a lot of energy plays. All right, let's look at something positive. Look at this, guys. GDXW. And whatever you do not buy GDXY. Go look at the performance. I got a video coming out later. I do Roundhill versus Yieldmax, and it's ugly. They can't get out of their way. And yet, you're still not going to lose money if you own GDXY. You're just going to underperform. Okay. I looked at the comparison. GDXW since November 18th, because Granite launched Nuggy. So that's why I did that evaluation. It performed 100% as well as GDXW. Normally, you can't match the underlying. So I took the distributions and I took it to gain. And then look at this even. Over 6 weeks is up 22.42%. Now, I know it's not the biggest, but all those other ones had 18 weeks. And look at all your other 6 weeks, all these tech companies. Nobody's even green. And I did an annualized number on it just to show you how crazy it gets because it's over a small period of time. But it's fabulous. Look at just physical gold. Now, if they had a physical silver, oh my God, this thing would be crazy. And that's the kind of stuff I talk about in Patreon. I help people. I have an options tier. I do a lot of things in my Patreon now. I have private consultations, 45-minute to 1 hour calls. Once a month, there's a tier for that. There's a request where you send an email, my Patreon, and you want to call. You don't have to be in the higher tier where the call's priced in. I help people over there. I've probably taught 12 people so far option. I do a 3 1 hour session course teaching options. And it's more than just, You can go out anywhere and look at some video. I got one in my YouTube on option, but you're not going to learn all the strategies. You're not going to learn the whys. You're not going to understand everything there is in the option tables. But yeah, you can say, oh, what's a put? What's a call? What's in the money? What's out of the money? What's theta? What's gamma? You talk Greeks. People don't want to talk Greeks. They want to talk, how do I make money? What's the strategy? When's the right time? 85% of all bought calls, long calls, people lose money because they don't have an edge. They don't know how to find an edge. If you're really a good options trader or player, you understand that. Okay. And how can you not find an edge when you're in a commodity super cycle? It just bewilders me that people don't associate bull market and commodity super cycle and understand. Instead, you want to chase tech that can maybe go down. Yeah, there's some darlings in tech. I own one or two tech plays. I write options on some tech plays, not many. I got one. Okay. And this is mundane. Normally, annualized 65%. So in this 6 weeks, it's up 7.56. Both sides of the equation, right? If this fund existed just over the last 10 months, you would have even way better numbers than this. I put out videos in June and July on my channel about what could be bought. Well, some of the smart people looked at it and said, I'm going to try that. They followed me over on Patreon. So you don't take action, you don't get results. Like, wow, you were right. Well, duh. I've been at it for 45 years. I've done that super cycle before. I've studied the one before that when I was in the last one. The markets aren't about just running a YouTube channel. Do you have skills? Do you understand this stuff? I do. No BS, guys. Here, it's technical sometimes in charts. It's, where are we? I try and do that all the time. I'm conservative in my deployment. This is an opportunity. I'm putting out a video soon, okay, that I see as a 38 bagger over 5 years. That means I don't see how it doesn't go up 38 times. Did anybody talk to you about it? Who was telling you about Nvidia back in the day saying you really need to get into Nvidia? I see this thing going up 40 times. You have to look at things. You have to understand history. You have to understand market. They want to just take your money from you. I got beat up, kicked around for years in the markets until I really, really studied it. And if you don't understand capital rotation and sector rotation, why are you even in the markets, right? The big guys have such an edge over you. Where are we going? And why are we going there? Right? Well, we're at the end of certain kind of cycle with paper money. I mean, that was supposed to be digital gold with Bitcoin. I haven't seen it now. Maybe it'll come back. I did hear the central bankers maybe by 2030 will start buying Bitcoin. I think they're going to start buying silver because they're running gold up so high. And we now have a shortage in silver. Go watch my videos, guys. Why is there a shortage in silver? Because the banksters, JP Morgan and their friends, have been paper spoofing and shorting gold, right? They're selling more than the annual mine production because they had a few warehouses. They don't have those warehouses anymore. The wealthy in the East, right? You have an Indian billionaire, you have a Chinese billionaire. They're buying up these things, guys. Why do you think we have so many critical metals now? Critical minerals. Why do you think China and Russia have been buying up stuff for 5 and 10 years? The US is at least waking up. And categorizing these metals is critical. Silver is a critical metal. Yeah, it's a proxy for gold in a monetary sense, but it actually gets used. Try and make an electric car without silver. Try and make a solar panel without silver. Try and fire, missiles without silver. Doesn't happen. Try to get a 5G infrastructure. Try to get a cell phone. I mean, silver is used every day. We're at a deficit for 5 years. We've wiped out the silver. The silver's going to $250. It may go to four figures. It all depends on how crazy this thing is. Watch some of my videos on it, right? Do you know what a miner's going to do that pulls silver out of the ground? Can you imagine the profits that they're going to have? It's just like imagining the profits that drove Nvidia to 5 trillion. Do you know what a 5 trillion market cap is like? It's larger than every country in the world's GDP, gross domestic product output, except for two, China and the US. So should one company with a graphics processing unit capability, it's leading edge, it's the fastest in the world, right? You need it in AI. But 5 trillion, all the gold and silver and all the companies together, like 3.7 trillion in value, every single one of all of those. And as those metals go crazy because people don't trust paper money, and then on silver, they need it, and in platinum, palladium is used, those things are going to go up multiples higher. All right, guys, I got one more for you. So if you want to go see Patreon, come over there, guys. I'm putting out some stuff, but I'm no longer just giving away, 38 baggers, a list of 25 10 baggers. If you want it, come over. It's peanuts, right? It's $10 a month. It's not going to stay that price for that long. All right, here's the final one. Here's something I did. I think you'll find this interesting. So I took these and I summed them up and then I annualized it. So this helps you guys. Okay. So I said I got all this 18-week data now. Now, normally I go over here and I got a summary and we go through the 219 period of time and the 618. I said, let me do this since I built this all. So everybody up here, okay, so let's sort it. Let's take a look. And I made it in two groups. So total return, who's your winners and who's your losers? Well, if you're in Google, this is their actual, right? So they've paid 1228, so they've distributed percent 2381 over their period of time. They're down, 308 in the last week. Not that big a deal. Current price, prior week price, the 18-week launch. No, of course these companies didn't launch, but when I'm doing my comparison, I should have said inception or whatever it is. So 18 weeks, right? 126 days ago, this is the price for all these. This is just last week. This is current. So how's the weekly change? So who's gone up and who's gone down? By far Google's gone up, Tesla's gone up, right? But I'm ranking it over here. I can switch, right? So Avcos gone up, Apple's gone up, and AMD's barely gone up, and the rest of the guys are losers. And then here's your distribution dollars, which don't mean a lot unless you see it in percentages, right? So who's paying a lot? Well, there's who, right? Hood. They never disappoint in distribution. But if it starts to get with a negative nav over time, that will get ugly and eventually it'll kill that, right? Who else? I mean, COIW is 26, but do you want to own one that's annualized loss is 76%? It's 39% over the 126 days. So anyway, guys, you see, I mean, Google's kicking butt. There's no question about that. So's Tesla, right? TSLW. So's Avco. So's Apple. Even AMD. And who? Berkshire Hathaway, Palantir, Amazon, and even, oh no, not coin is negative. Okay, Nvidia. So remember, because this takes, when you took the full 18 weeks, it didn't. But when I take the gain or loss and I annualize it and I annualize the distribution, that's why these numbers are slightly different, right? Because I'm saying, hey, Nvidia only had 0.20. That was their actual without trying to annualize that. And then look down here. Look how crazy good this gets, right? These are all negative except for the commodity supercycle players. Duh. You think there's something to that? Did you know that GDX, just a big ETF, there's plenty of them out there for gold and silver miners, is up over 100% year to date? The hell else is up like that? Doesn't exist, guys. This isn't just a little, oh, yeah, it's going to last 3 months and you're done. This has got 5 years minimum to run. I may be out in 3.5 if we get the kind of numbers. I mean, I'll probably get out at 300 silver, maybe at 250 because I'll just, had so many. I've got 7 baggers now, 5 baggers that I've owned a year. I can't imagine what they're going to be. We'll probably see $100 silver January, February, or March. Maybe it takes the first half of the year. And then the following year, we'll see 150 or more. But again, nothing surprises me. We may see 75 before December's over. We're friggin' at 64 right now. And I had a ton of people come in and say to me when we got to 50, even in my Patreon, Bruce, every time it gets to 50, it crashes. Why is it different this time? I said, well, first of all, we hit it in the third inning of our commodity super cycle. The other commodity super cycles, we had a blow off top to get there. 1980 with the Hunt brothers, 2011, we recovered out of the whole, Lehman Brothers, the whole financial, the mortgage crisis, the bailout, the banks, all of that paper overing the money. That's what led to that blow off. That next blow off, I can't even begin to tell you what silver is probably running from, 350 to 1,000. So that's a good problem. We got a long ways to go. And I told people that, right? And it's exactly bearing out. This isn't over, guys. Don't you want to be in something that's going to go higher consistently over time? Yes, of course there's we had to pull back on October 16th. We got toppy and we did an A retrace. We bounced back up in B, and I said, hopefully we go to an equal C retrace or lower. And I was ready to load the boat. Didn't even happen. Why? Because you err to the upside often in the bull markets. And we're already back. Gold's not yet broke back out of 4,400, but silver's just blown through its old high. So we're already back now. GDX is already above where it was on October 16th. And so this run's probably going to run pretty substantial. And yeah, we'll get a retrace, but every bull market retraces. I study the commodity super cycle. I talk about that. All right, guys, I'm going to let you go. This is getting long in the tooth. I've ranted. So for those of you that didn't hear my rant for a while, hopefully you got enough on this one. But guys, the data doesn't lie. I don't lie. I show you the data. I try to get you to look at the data. I try and get you to understand the data. And I get it. Look, there's a few of you. I'm going to wrap this up. There's a few of you, and there's not many, and most people don't have the time, that are good, what I call traders. You get in these things, you ride them when they're moving, and you get out. But that's 3%. Most of you guys in high yield are in hopium world. You look at the high yield and say, oh man, that's what I want, even if I get a third of that 90%. And then you wake up one day and maybe you get by a 3 or 4 or 5 months and you're getting a 20% return because you get a 60% yield and a 40% NAV decline. And you finally wake up one day and say, hey, I'm only up 20. But that isn't when you wake up. You know, when you wake up is when it then goes into a down cycle. And now all of a sudden you got a 60% NAV and a 20% payer. So you got a negative 40. And after a quarter or two of that, you go, oh my God, I'm losing money. And then you wake up that that can happen. It can happen in the commodity super cycle at some point. I told people when they came in to my Patreon, hey, they're like, well, hey, you know, it's October 10th. I was feeling toppy. I can't pick the top. Nobody can pick the top. I can't tell you the bottom. I can look at the charts and tell you what I think and what probabilities are, but I have to constantly reassess that. So at the end of the day, I'd say to somebody, you know what? It seems toppy. Go buy a third. We're in a bull market. We're in a commodity super cycle. 6 months from now, it's going to be higher. A year from now, it's going to be a lot higher. 2 years from now, it's going to be a lot higher than that. 3 years from now, it's going to be way higher than that. But don't go all in on a day. That's not the way I invest. It's not the way I want somebody to invest. Go buy a fifth. Go buy a third. Wait a week or two. Do the same thing, right? I trade options. I may buy 10 options. I may pick a time to sell 3 of them. Right? Sell another 3. You know, it's like trimming profits. I tell people in the commodity super cycle, look, there's a lot of upside here. Don't set a tight stop. Don't trade this thing. There are people, again, 3% that may be able to trade it until they can't. Every super cycle tries to shake you out. Eventually, we'll have a 50% retrace. It's probably when gold's 8,000, 9,000, silver's, 180, 200, and all of a sudden we'll get a rug pull because they want to get you out of those. By then, everybody on the planet knows we're in a commodity super cycle and everybody's investing. But they want to scare the crap out of you. And they will. And you guys all have stops and you'll get yanked out. And then you'll be like, well, when do I get back in? Well, you probably shouldn't have gotten out. Now, what can happen is hold your core positions, go out and buy some inverse ETFs. But on these smaller plays that are 20 baggers and higher, that have spreads, I don't trade those. I don't put stops on those. I trim. If I'm up 700%, I've probably trimmed, maybe a fourth of my shares. So I'm positive, but I don't buy into that, house money thing completely. Unless you're in a bull market. Everybody said on Misty, I got all my money back in 8.3 months. I did videos on that as well. But I knew it wasn't a 5-year or 10-year run. All the YouTubers out there, and then new ones coming in, and the new ones after that, and new ones after that. Every video was on Misty, then every video was on Ulti. Why? Because they could make money. Do they care about you? Hell no. But they can make money. And I'm putting out stuff that can make a fortune, generational wealth, and nobody wants to watch it. So I don't care anymore. I've almost stopped doing it, except I catch a few of you that come over to Patreon and you deserve it. You have to take action. People can tell you things till they're blue in the face. The facts are there. I could promote it more. I could come in here and show you chart after chart after chart. But why should I even tell you which ones to own and the ones I've vetted and everything else? You haven't treated me well. So come over to Patreon for peanuts and learn how to make wealth, guys. All right, that's my rant. I'm done. End of video. Enjoy this. I will do later a comparison of yield max. But honestly, it's no comparison. I can tell you the result, 80% of the funds. If you're, okay, here's to sum it up. If you're bullish and you should not buy a high yield income ETF, a single stock in particular, you should not buy it unless you're bullish. You don't want to own these things when they're going down. And Roundhill, I prefer. They use leverage. So I want to own it because I'm bullish. It's going to have higher highs and higher lows, not the other way around. So you get what you deserve. Max can only capture a third, roughly, on the upside. They can capture 2/3 to a full 100% in Roundhill. But you know what? Based on this, guys, look at this. Do I really want to own WPay? Not really. Why do you guys say? Now, I'm not knocking Roundhill. I can knock certain things, guys. So you got some great performers in here, and you've got some not so great performers. Look over on total return. So these at least have their head above water over 126 days. And I'd say more than less. So that's what you're doing. But for me, I create my own WPay. It might only be 3 funds, right? And you can buy, I imagine if I add them all up, I've still got positives here. But I was never a big fan of YMAX. I'm not a super big fan of WPay. I understand why people buy it. But the fund doesn't pick the winners. They just pick the tech stock. Look at these. Which one of these, if there was a fund of funds for these 6 and you bought them all, which 2 should you have been in? Duh. All right, guys, rant's over. I'm done. Not financial advice. I'm not a financial advisor. Have a great one. Bye for now.